Hey guys, Adam here with BizNexus. I recently had the chance to sit down with Russell Cohen from South Florida M&A Advisors, and we had a great conversation about the M&A landscape in South Florida, which has been pretty active lately, especially with the aging population and the big shift in people moving to the state post-COVID, and that's continued since. Russell shared some great insights on key industries driving M&A activity across South Florida right now, everything from real estate, tech, fintech, even healthcare consolidation. We also talked about buyer and seller trends, how long it typically takes to get from first contact to the actual exit, and what's making South Florida such an attractive market for deals right now. On top of that, we got into Russell's insights on how deals are getting financed, including seller financing, earnouts, availability of financing tools for buyers, etc. If you're interested in the M&A space, especially in Florida, this is a good one, and Russell is definitely a top player in that area, so he knows what he's talking about. Obligatory plug for today: if you're not familiar with BizNexus, please do check us out, biznexus.com. For do-it-yourselfers, we have an approved access-only marketplace with thousands of acquisition opportunities, usually around between 15 to 20,000 verified opportunities updated daily. And we have our community where you can network with people like Russell and search by keyword for potential niche partners or search by area. We also have AI overlap suggestions that can take care of that for you if you don't want to proactively search. And then the really innovative solution that we're most active with these days is OmniSource, and that's a deal sourcing platform that we built for corp dev teams, family offices, private equity groups. It combines all the on-market, off-market targets for your mandate into one streamlined, stupid simple experience. We're currently helping deploy about $6 billion in committed capital between our partner and concierge members on that platform. We've been opening it up to individual repeat acquirers and should continue going that direction through 2025. So if you're interested in a demo, you can schedule that directly from BizNexus, or you can visit omnisource.ai and schedule one from there. We're just kicking this podcast back up going into 2025, so definitely shaking off the rust a bit. If you like what you hear, please spread the word, give us a review, some stars, so we can play the algorithm and feel good about putting more effort into this content going forward into the new year. Disclaimer from the always present legal team: podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework. All right, Russell, how are you? Welcome.
All right. How you doing, Adam?
Good. For everyone out there viewing, listening, podcast or video, I'm Adam from BizNexus. We're here for another roundup interview. And today we're talking with Russell Cohen, who's based in South Florida. So if you're not familiar with the roundup, we typically talk with specialized M&A players about deal activity and transaction updates on the specific niche that they focus on. And Russell is very active in South Florida, so I'm excited to have him on today. So again, Russell, thank you for taking the time.
Thank you.
Now, we typically do like to get straight into it. And I think most people who are connected in the industry probably know who you are. You're involved with the organizations. You're very active with deal volume, deal transactions. Florida is an active place, obviously. But for the rest of the viewers and listeners who aren't directly involved with M&A, maybe you could give us some context just on you know, South Florida M&A advisors and typical deal activity you're dealing with.
Sure. Great. Thank you. So South Florida M&A Advisors is a boutique M&A advisory firm. We focus helping business owners all over the state of Florida, but I tend to stay in a little bit in South Florida, from 5 to 100 million enterprise value. We handle all different types of industries. And yeah, I'm looking forward to, helping business owners prepare their business for sale and get that eventual exit.
Industry agnostic, but you're very active. I think you've done something like, is it over 100 million in transactions over the past 12 months?
We were, my team was very fortunate. We had we sold a roofing company up in West Palm Beach. It was a platform transaction, sold for 100 million. And we had a private equity company come in. It was their first entry into the roofing space. So that, that was a very large M&A deal for South Florida. So, love to have more of those, but, listen, every year is different,
Yeah, and that's, we'll get into who's buying, and for anyone who's not familiar with the terminology, a platform means private equity. So private equity came in and scooped up this deal, but let's get to that. I think with South Florida, obviously a pretty active spot for M&A, aging population. Then since the whole COVID shuffle took place, and a lot of the people who were once upon a time in New York are still down there, and there are a lot of funds based there. What can you tell us about South Florida and what's driving M&A activity? Has it been on the up? Is it trailing off? And what can you tell us about South Florida.
Yeah, I mean, as an M&A advisor, we can only handle so many deals in a given year. There's only so much time that's allowed because it's really time intensive. So 2 to 3 M&A transactions is typical, will fill up your schedule. So the biggest challenge is finding sellers who are really ready to be on the other side of ownership, because it takes a year to sell, and there's probably a 2-year plus transition. So the biggest, the buyers, finding the buyers, they're out there, they're ready, they're liquid, and they want to make things happen. Getting sellers into the queue and getting them prepared for sale, and really taking the process seriously where we can do our job most effectively.
With deal activity, aside from the summer lull, would you say there are more buyers out there, less buyers? Are people actually getting past LOI? Are they getting tangled up with loan approvals? I mean, what do you see in terms of buyer activity?
Yeah, if we get the seller signs on as a client, and if they fit in the, let's call it the minimum 2 million EBITDA, they're going to line out the door. If you're a roofer or home service business, yeah, we're going to have lots of offers. Obviously you got to pick the right private equity group or the right private company to make the acquisition, but there is a very heavy private equity desire for any business that has $2 million in EBITDA. We're just lacking the inventory to fulfill the needs of all these private equity groups.
Yeah, because there's $2.5 trillion of capital out there, committed capital raised, that these private equity groups have to deploy, but minimal deals. For people who aren't, again, familiar with M&A, when Russell says EBITDA, he's talking about cash flow. So if you're running a $2 million cash flow business, you're based in South Florida, that's the type of deal that Russell is dealing with. And obviously you're well networked with all of the private equity buyers who are focused on that area. That's why we have you on the show. Sellers, have you seen more or less of them coming to market? I imagine it would be fair to say most of your sellers are aging population based in Florida, or what are you seeing there? And then have they been holding on to it, or are they planning until the election, or what do you see there?
Yeah, my most recent sellers, they all been in their retirement range of in the early 60s to late 60s. So, because of the timeline to sell and the transition, could easily be from start to finish, 2 to 3 years, 2 to 4 years, and some like to stay on longer. The key is that they want to see the light at the end of the tunnel. And yeah, summertime, people are traveling. So it's definitely on the activity side, on the seller side is slower. But the last half of the year really, or you say last quarter of the year really picks up. And then December, as we go towards the end of December, everyone goes into hibernation for the holidays. Right. This is election year. I mean, so a lot of unknowns coming into the marketplace. I think we're about a month after the events of the Trump assassination. We have had a list of a lot of weird events that are happening that usually take about 50 years to happen. All happened in 1 month. So a lot of weird things going on. But the private equity groups are still out there looking for deals. They email me all the time. We have a huge buyer database, and we have all the tools to find the private equity groups. They're just looking for deals.
Yeah. So, I mean, we haven't seen any slowdown with the private equity groups who we're working with, but with individual buyers, I mean, are you having conversations with sellers or with buyers where they're kind of just waiting to see how the election shakes out? Or are people kind of on pause until the election? Or what kind of conversations are you having there start with sellers, with entrepreneurs who are thinking about selling? Are they trying to get a rush in?
Yeah, I kind of have a candid conversation. I think we're sitting like if you remember 2007 when something was wrong and you're not sure what it is, and we're kind of, in my opinion, we're sitting on that edge where we don't know where the economy is going next year. So yeah, they want to make something happen, and it does take a year. This would be the time to make your move, because it does take, 9 to 12 months to get to the finish line, to get to the closing table. So anyone that enrolls now, you're a next year sale. So the process to sell takes so long. We don't know how our economy is going to look heading into 25 after the election. So it just really, the seller has to want to be on the other side of ownership to make a move at this point.
Yeah. I mean, without getting political, it's two very different possibilities, which is a lot of uncertainty for a potential seller. And you're working with these sellers for years potentially, right? I mean,
yeah, we need to get in. We typically need to get in a couple of years in advance, because these private equity groups are all working on GAAP accounting, and most sellers aren't. So the books and records, revenue recognition, networking capital, all these things that are very important to the M&A process. The books and records, the QuickBooks, they have to be really, sparkling clean to be private equity ready. And that's what we do when we go in there, and we can put the right recommendations in place to get you private equity ready so you can maximize the multiples and make that private equity deal it's always going to be tough, but make it a little more bearable for you,
Yeah. So you'll go in there and advise on the systems and financials and get everything streamlined.
Yeah, I'm not the one to implement it. We'll refer coaches. We'll get fractional CFOs involved. We'll get a team together, advisors, maybe get a financial planner involved, and we'll start making moves where, everything needs to be in line. You're going through the sellers are going to go through this quality of earnings. Everything's going to be turned upside down, 6 different layers of quality of earnings and due diligence. So yeah, you got to be really prepared. And they're looking for issues within the business. They want to buy a good, solid business, and they want the owner to be part of the team.
Right. And we'll close out with your contact info, but obviously if you're running a business, the more lead time you can give a guy like Russell, the better, so he can gear your business, frame your business for the best potential acquirers. And oftentimes that won't be a public auction. It'll be a closed auction. So maybe, Russell will identify kind of your top 5 buyers, and I don't want to say pit them against each other, but create that demand in a strategic way. And the more lead time Russell has, the easier that job is going to be for your entire team. So,
one other point, I had an experience this year. I was representing a company, and their trailing 12 months was trending 30% down. We went from a $10 million offer, and once the trailing 12 started hitting 30% down, we lost the number one buyer. The second buyer offers changed. So the sellers need to keep the foot on the gas pedal until you're sitting at the closing table getting that wire, because the private equity group will be watching those numbers straight throughout the process. So it's a tenuous process. You got to keep running it and keep the numbers in line.
Yeah, they're going to use whatever leverage points they can find. So typical with private, and you're on both sides of it. So you're working with the entrepreneur who spent 30 years building a construction company, and then you're working with multiple private equity folks who have a very,
these private equity
criteria.
Groups. Yeah, and this is what they do for a living. They're professional buyers, and the owner is a first-time entry into this process. And so you got to get the right team together. Obviously being local to Florida and South Florida, we'll give them more boutique, local touch and be in front of you, and instead of on a Zoom call, and we'll be right there with you, holding your hand and giving you the advice throughout the deal.
Yeah. And so private equity active with the smaller acquirers, so people maybe moving down to Florida or buying a job, or these fundless sponsors, or just not established private equity with committed capital. Are you seeing any change in terms of loan approvals or in terms of deal structures, or things slowing down, or is that really just as strong as it's been?
Yeah. So with deal structures in these transactions, if you can get like 70, 80% down in cash, then that's probably par for the course. There's going to be rollover equity. That could be another 10%. There could be an earnouts, another 10%. Seller financing is also another option. The private equity groups or any deal structure, they're going to want you to be part of the team. They want you to have interest in their success, where, if you're, on a Main Street deal, the seller just wants their money. They're out in 30 days. You're not going to be able to exit your business quickly in an M&A transaction. You got to be part of the team, and it's the deal structure is very important. You're going to see very similar LOIs coming through. Some less cash, some more earnouts. They're all, that's part of the process. You have to accept it. If you want to dance in private equity, then that's what it is,
Yeah. And for the non-private equity deals, for those buyers, are you seeing those loan approvals take longer? Has there been any change?
If they're trying to go SBA from 5 to 10 million, SBA can go 5, and then their secondary loans can go up to 10 million. And obviously, once we start reaching above 10 million, then you got to get debt financing. So the interest rates are high. That's what hurts the multiples. You don't have to. Everyone knows that the Fed has raised the interest rates like 5% in a very short amount of time in history, and that affects the cost of capital, and that creates the multiple. The multiples are not going up. They are going down because the cost of capital. So yeah, and the private equity typically is putting in 30% of committed capital, and then they're leveraging their way in. So that's the reality of how they're buying these businesses.
When you meet with an entrepreneur, who has a deal that doesn't have like any major red flags, what are you telling them right now to expect in terms of maybe seller financing, what they should be prepared to offer, or can you even generalize?
Yeah. When I meet with business owners, I want them to understand the net working capital, very important, because that's not really they're not really expecting that they have to provide money to the buyer, which is, the net working capital, current assets minus current liabilities, like an 18 months trail. So they're providing that working capital. And I do prepare them. If you get 70 to 80% down, then that's great. And please expect to have some rollover equity and expect an earnout, just depending on what type of, cash flow they have. And they got it. Once again, if they're trying to get out quicker, they're going to lose the multiple. And if they're willing to be part of the team and help in the success of the private equity or the buyer, then there could be a second bite of the apple 7 years later, 5 to 7 years later, when the private equity group exit the platform. The second bite of the apple could be a lot bigger than they got in the first sale. So, if they're in it for the long run, it could work out really well. There's always risk on the downside, but they want you in the trenches with them and to make sure they're successful.
Yeah. Yeah, and that's a common model these days. Like more often than not, they're going to want the seller to roll some equity and stay on board. And
no doubt about it.
Yeah. Okay. So looking forward through year end, the election, obviously everything's really hard to predict, but what do you see? Do you see kind of a pause? Do you see things just rolling through? Do you see anything?
I lived through the great 2008 recession, and that was like a 4 to 6 year thing. What happened was private equity groups lowered their EBITDA cash flow requirements. So if we hit equal economic times similar to 2008, then the private equity groups will just lower their expectations of EBITDA. Right now there's an abundance of buyers out there. If you have a quality business, they will come, and it could be a very competitive situation, which creates a great situation for the owner. So I don't expect that to change. The only thing that can really throw a wrench between now and the end of the year and going into 25 is obviously there's a lot of geopolitical situations going on that could upset any business. So that's my biggest concern, more on a macro than a micro, because there's a lot of unknowns that we're facing in the next 90 days leading up to the election. Yeah. Once we get past the election, then it really just, can the economy hold on? If the economy holds on, then 25 will probably be similar to 24. If the economy doesn't hold on, then the private equity groups will be lowering their expectations of cash flow, basically.
Yeah, with more predictability, more sellers will feel comfortable coming to market. So hopefully things level off that way after the election. And Florida is a hot target, right? I won't name any, but I would say the majority of private equity groups that come to us and they go through their specs, they will say they are, at least, if they're not interested at all in maybe California, for example, they're less interested in California, but they're all hot on Florida. And that's been the case
Florida is a business-friendly state, no taxes, no business taxes, that's great. Last stands for freedom, if you want to go that route. People know that, So Florida, 20, 30 years ago, why would you buy a business in Florida, in the 90s, right? Yeah. Now it's hot, you want to be in Florida. You want to be here. Yeah. This is where you want to do business.
Yeah. Well, I try to get down there in February if I can, because I'm stuck in Massachusetts. And so you definitely win during the winter months.
Set up an office here and listen, you write off the expense,
Maybe. It's on the hit list.
That's hot during the summer, but you seem to, if you're a Floridian, especially in South Florida, when you have the winters, you don't remember the summers because the winters are so beautiful. And once you hit the summer, you're like, I don't remember being like 70 degrees. It's always like so hot and humidity. So
yeah, that's the thing. What's worse, summer in Florida or February in Boston? Like I'll take summer in Florida every time. Yeah.
I'll take hot. I'm not a cold. I grew up in New York, and cold weather, bone chilling is not my style.
Yeah, I'm in Rhode Island right now. I kind of stick to New England, but in the winter I'll try to get down your way. And there are a lot of people who are coming from Florida instead of New York now, right? They're here for the summer, but they are domiciled in Florida, and that's not changing. It's surprising how much talent has moved to states like that.
A lot of companies are setting up shop here. They want to be here. Because
funds especially.
There's so much to do down here. You got golf all year round. You got the beaches all year round. You got great sport teams. You got biking. You name it. You get everything. You got tennis. You can play tennis. You got so much activity going down here. It just reminds me of like California in a sense of outdoor style living.
Yeah.
Great quality of life. It's a fast pace down here, but it's not a New York fast pace. And so you get the business style of New York, but it is a little slower. But it's catching up to New York really quickly. A lot of New Yorkers down here, a lot of Northeast people live down here, and just a booming area. And it's a little seasonal, but it's not getting as seasonal. It's starting to as more and more people move down here, it will be year round basically.
Yeah, and just stay down there. And it's obviously, like you said, a business friendly environment, tax friendly environment. So. Good spot to be. So we'll definitely have you back, and we'll check in on this, I think, post-election if you're game.
Yeah, great.
See how things are going in South Florida. But really helpful insights. I appreciate you taking the time coming on
Awesome.
the show.
No, thank you, Adam.
Real quick, if anybody's listening out there or watching, what's the best contact info? How can they get a hold of you?
Oh, very simple. My cell phone number is 954-646-7651. Email rcohen, RCOHEN, at southfloridama.com. And glad to just have a conversation and get to know you.
There you go. Personalized service from Russell Cohen. I think you're the first person to ever actually offer up their cell phone. So you're a brave man.
It's always on.
All right. Well, thanks again for coming on. I think that's going to do it for this one. We'll recap all of these notes in the newsletter. This is going to be going live, LinkedIn, Twitter, Facebook, YouTube, everything. But then we'll also roll it over into the podcast. So whether you're listening or watching, thanks for coming. We'll see you on the next roundup. Russell, thank you again for the time. Look forward to having you on the next one.
Thank you, Adam.
Great.